Alrighty, well, we can just kick this off, do the usual song and dance of taking a look at the markets, taking a look at the news and stuff that's going to be coming out this week, and some of the stuff maybe that we can hopefully expect. And then I'll go through a list of just some of the interesting stocks and things that we saw setting up through the week, both me and Mike and Tyler and everything that we've kind of noticed going through here. So let's start off with the SPY. It's the SPY, and it's been this way for the last month or so, just nonstop. Really, just dip buyers are just firmly in control and just absolutely prevalent in the market. FOMO, greed, you name it. Now, Friday we did happen to see some selling. Imagine that, but it was largely, I would argue, due to the gap up, due to just finally seeing a little bit of profit taking into the weekend, I suppose, but we didn't even really sell off. Let's be honest, we filled the gap, and that was it on the SPY. Same with the Qs here, kind of just filled the gap. Now, we did obviously see, a nice strong, we've seen a nice strong week in general in small caps and value, so I'm hoping that if this market is going to continue, that we at least continue to see that rotation, because I think we're all done with seeing this big cap tech dominated market for the last year. So I'd like even just like a little period like this where we see value plays kind of come a little more in favor. People start maybe buying things that are a little under moving averages and so on. But we'll have to see how it goes. We obviously had some headlines that helped speed that up. Pfizer's COVID pill that they talked about that came out, they said 89% success rate in hospitals. That really kind of bolstered the reopening plays over the last couple of days. You look at like the cruise lines, nice explosion on Friday. You look at the airlines, nice pop up. You look at a lot of those kind of reopening value plays, and you saw the reopening plays. You saw a nice gap up and a nice run on all of those due to that kind of play. Now, look, whether the market was actually scared about COVID and worried about COVID, or whether that was just kind of an excuse for people to dip buy some of these plays and get some money in different spots, that's fine. Whatever the case may be, we'll just see if we can get that continuation on those plays. So we will have to see. But that's kind of what we've seen. It's been tech dominated mostly. Now rates have kind of had a nice little drop here over the last 2 weeks, which kind of has also helped the tech, honestly, and it's been a little bit of a decoupling in the market in some areas. We had volatility spiking like crazy over the last 2 days. Meanwhile, the market was moving higher. That's something you usually don't expect. You had rates moving lower, but value and tech was moving higher. That's not something you usually expect. So this is a weird, odd time in the market, and so if people are seeing some of their stuff decouple and any indicators they may be looking at that usually do well, having any issues, you're not the only one. It's kind of just the market structure we're seeing right now. And look, we've talked about this a lot. There's several things in the back end of this market that kind of help this run and help just our pops in general. First of all, the only way you're making return these days is if you're either buying crypto, you're buying the stocks, or you're buying commodities, and that's it, or a select few commodities. Looking at you, gold. And that's it. And there's so much liquidity, so much money out there, so much free money. People are rocking and rolling. I saw a survey that it was like 4% of people that have quit their jobs in the last year have done so because of their crypto gains. I don't know who ran that survey, but I believe it. I frankly believe it, that there's probably a lot of people who bought, Shiba and Dogecoin and all the other shit coins. Mike said that he had a list of like 20 that he was looking at, and like 5 of them were spiking over the weekend. I don't know why, they just were. So it's kind of the market we're in, where we're just seeing a lot of greed and FOMO and just some crazy squeezes around. So that's kind of where we are. What's really going to keep people in the game, obviously, in the long run, when we get the inevitable correction, whether that's this week, this month, next year, who knows, is going to be risk management, obviously, and watching our levels and watching the indicators and so on, because it's a little bit of a funky market. We have seen some of the internals pick up. Advanced decline was nice yesterday. The thing is, the internals are going to look a lot better when the value plays are running, because there's more broader participation in the market. So that's what we need to keep an eye on, because for a while there, while the market was pushing higher, the percentage of stocks trading above their 50-day SMA, 100-day SMA, whatever, was really not participating. And so it was just the strong stocks that were getting stronger. I mean, we were being led by stocks like NVIDIA. Look at NVIDIA. This is ridiculous. You know, this is absolutely ridiculous for no headline, no catalyst. Seeing something like NVIDIA and Tesla and guys like that just going absolutely astronomical to the moon. And you know, you had Netflix not too long ago. Amazon spent 2 days running here, 3 days running. So it's just it's a very odd market. You know, you don't know where people are going to be pushing next. But the key here is just going to be, you know, we're obviously very short-term focused, and we're very kind of focused on protecting ourselves. In terms of some of the economics and news, before I look at the levels and what I'm expecting in this market, so Powell does speak twice this time. So it's let's see, he's speaking Monday and Tuesday, and I just want to double check the title of the thing he's speaking at. It is the Flexible Average Inflation Targeting and Prospects for U.S. Monetary Policy. So it looks like that's some ECB stuff that we have on Monday. So keep that in mind, because while it's not only the U.S., you know, while we're sitting here talking about tapering and raising rates and everything else, so is Europe, so is the Bank of England, so is, you know, everyone else. So you've got a lot of also overseas influences, so keep that in mind with rates. But anyway, so you've got also you have the Gender and the Economy Conference on Monday and Tuesday. I don't expect anything from that. It's gender and the economy on Monday, and diversity and inclusion and economics on Tuesday. So we're likely not going to get anything from Powell Monday and Tuesday, just in general, that's going to move the market, because that's not the topic of discussion there. So I'm not expecting anything, and he's also very good at keeping himself kind of tight-lipped on stuff like that anyway. He never really slips up. So that's it on Monday and Tuesday, really. You'll have PPI on Tuesday as well. Thursday is a bank holiday. The markets are still open, but you're not going to get all the economics. Instead, they move jobless claims to Wednesday and some of the other numbers to Friday. But it's a relatively quiet week on economic numbers. It's going to be like CPI, PPI, and consumer sentiment on Friday, and that's like it. And JOLTS. I am curious about the JOLTS number on Friday, because we keep getting those numbers where it's like 2 million more job openings than unemployed, or 3 million more than unemployed. So that's going to be something that's I just like keeping an eye on, because it hasn't gotten any better. I think it's one of the few jobs numbers that hasn't. But we'll see. We obviously had that vax mandate get expanded last week. Now, that was blocked over the weekend in the courts. So that battle is going to be going on, whether that vax mandate is going to expand to private companies with over 100 workers or not. That could have a big deal and impact on the labor market going forward if that goes through or not. We'll see how long that process takes, but it's something we need to keep an eye on. Other than that, you've got the other stuff overseas. Energy crisis, which we talk about every single day. I'm not going to continue to beat a dead horse on that, but nothing's really changed there. So the further and further we get into winter, you know, further and further and crazier that could get. You obviously have China's situation. So China has COVID outbreaks in 31 provinces. They're shutting down some of those. They're having those issues. That could further exacerbate the supply chain issues. We talked about, you know, their iron ore shipments are not coming out anymore because they need them. Coal, they're just importing all the coal they can. They're not exporting a lot of things because they're facing some serious economic issues. And that's a big deal, because that's about a third, at least, of the global GDP growth. They obviously have Evergrande, and several other companies have been defaulting on payments as well. So that's still building there as well. One other headline is on Friday, they passed the infrastructure bill through the House. I don't expect it to pass the Senate. I don't think the market expects it to pass the Senate. I did see an interesting thing in there, and I didn't dive into it, is that within there, like, I think $1 billion or something is going to a company that Manchin's wife is tied to. So I'm Mnuchin or Manchin, however the hell you want to say it. So if that is like a way to get him to just say, all right, yeah, sure, why not? I love infrastructure all of a sudden. Then, you know, maybe it could surprise the market and get passed. I mean, that's how politics is these days. So it is, it's something to keep an eye on. It could affect some sectors. It could affect the broader market because, a nice big spending bill of that size, while we're currently facing some severe inflation, could also make that kind of crazier as well. So there's that. Obviously, we have to keep our ears open for the Powell renomination. Both him and Brainerd were seen in the White House not too long ago, so that's something the market's going to be paying attention to. If we get anything that indicates that Powell isn't going to be renominated, the market will freak out. So keep that in mind as well. And one other thing I want to mention is within that infrastructure bill is something that could actually cause crypto to potentially have issues, and I believe there's a crypto tax in there to help pay for the infrastructure bill. If that is true, I haven't looked at the extent of it yet. If that does pass, I mean, that's not a good sign for crypto, at least in the short term. I could see people hitting out of that, but that's something we'll have to keep an eye on as well. Obviously, we had job numbers. Job numbers did really well on Friday. We got through tapering and everything else. It all just kind of went through and helped continue to bolster the market. So that's where we are. That's the economics. That's the headlines. A lot of stuff going on. A lot of things to pay attention to. But that's kind of this market right now. And then guess what? In a month, we're going to have the debt ceiling again. So we get to play that game again. So there's a lot of stuff that we need to be kind of juggling here in this market. And it's kind of just the nature of the market right now. So actually looking at the market itself, we saw a decent amount of selling come in, kind of midday into the end of the day yesterday, which was actually kind of nice. People took some profits, kind of locked out into the weekend, got rid of headline risk. I mean, we're pretty elevated up here on the SPY. RSI is getting actually pretty hot here at 75. If I zoom out on the SPY, this is almost about where we tend to kind of feel that pressure. Last time we got up here, or the last two times we got up here, we had a nice gap down move down. So whether we're going to see that again or not, I don't know. No one knows. But based on history, this is approaching the level where we start to see the SPY consider brief pullbacks. So that in terms of speed, velocity, RSI getting a little hot, something to keep an eye on. Obviously, we saw a little bit of that on Friday, but this is nothing. This isn't panic selling. This isn't, people flooding out of the market. This thing would have gone down a lot further if it was. This is just nice, orderly kind of rotation, taking some profits. I mean, we've got some, much bigger red bars on here alone in the last couple of months compared to yesterday. So maybe we see that this week. I'd love to see that this week. Every day, I just kind of use the same indicators to help determine whether I want to be bullish or bearish for the day. I use the pre-market levels. I use that VWAP, volume weighted average price. I use the opening print. Just find what you like to help determine who's in control today, because that it really helps save you in terms of days. On here in the SPY, we were above all of that. There's no reason to short. Same deal here. Same deal here. We were below all of it. No real reason to buy for the day at least. Same deal here. We weren't in control until we were above all of that. On here on Wednesday, and that's been kind of a nice little tell in the market. Now, obviously, we're a little decoupled from the VIX, but we've been trying to use that as well to kind of give us a little bit of indication of who's in control. Do we think this market's gonna pop or not, or drop? Volatility's been super low lately, so it's something to keep an eye on as well. Another thing, and this is a good example, and someone had brought this up during the show yesterday, of kind of using multiple markets to kind of figure out when we're pulling back or maybe popping, because while one market like the SPY may not be at an important level, something like the IWM might be. And so when we pulled back yesterday in here, we bounced. IWM tested VWAP and started pulling back. SPY and Qs weren't necessarily at VWAP, so there's no reason to know when we were going to stall, but they kind of matched up, So IWM actually was the better one to watch at a certain point. You saw resistance step into the SPY at the same time. Same with the Qs. We kind of hit resistance, and it may look like a random spot on the Qs in the SPY, but the IWM, gave us at least a little bit more of a cleaner tell, which was VWAP. So that's why sometimes rotating across those markets can help like that. Obviously, while I'd love for the IWM to continue this tirade, got a little up here on the RSI. We went a little fast, but we were up above RSI almost this entire move up last time. So keep that in mind, that we can't just say, all right, RSI's up, I'm going to short. We need to watch price action. So I'm hoping that we continue to see rotation. I'm hoping IWM continues to kind of lead us here. Momentum, by the end of the week was technically on the downside, but we'll have to see where we are on Monday, because so far we've gotten through the weekend with relatively no headlines to derail us, so people could continue to squeeze us higher. Last headlines I want to mention, and then we can kind of rotate a little further into stocks and levels and stuff, is don't forget, I think it was earlier last week we mentioned Goldman Prime Brokerage, which, is where they see a lot of hedge fund and fund flow data, said that a lot of this squeeze up over the last month has been some of the highest short squeezing that they've seen in the last 14 months. So that's kind of propelled this market higher as well, is that people keep trying to time this market, keep trying to short it, and then they keep getting squeezed out. Meanwhile, they said they've also seen some of the largest fund selling that they've seen in 14 months. That's the smart money. That's someone that, maybe not, we could still go up for a day or two or three, but if the smart money and the big money starts selling and they're not buying anymore, we will go down at some point, because that is who sustains the market in the long run and actually moves the market. So if the smart money continues to sell, or whether they're just rotating, that's something that we need to be keeping an eye on and be leery of. So that's us. That's the market. In terms of the actual levels to watch, it's hard because we continue to make new highs every day. So this 467 is probably what I'll watch on Monday. It's the kind of the dip point from Friday. It's where we kind of had a nice little lid on Thursday. And so if we get below that on Monday, I would like to see a little bit more of a continued pullback. I would at least see us maybe get to this 462, which is where we broke out from after the Fed taper. In terms of maybe a bigger level, you have back down here, maybe this 458. Hey, if we reach 458, that'd be great, because, even then we'd still be 6 points off the 20-day SMA. Like, we'd still be pretty elevated if we saw a pullback to that extent. But I'd like to see it. I'd personally like to see the Qs get down to this 382, in the intermediate term, not necessarily just in the week. But who the hell knows if we can actually get that. But that's what I'm looking for. That's what I'd like. If we're above those levels, there's no reason to be shorting. There's no reason to be fighting this and jumping on all of this. We'll just have to keep an eye out on the headlines, the things like infrastructure, the Powell renomination, the Pfizer COVID vaccine, and the COVID cases, I suppose, and things like that. There was one other headline that could maybe not derail the markets, but could give the Qs some issues. Elon Musk went out on Twitter this weekend and asked Twitter, hey, should I sell 10% of my stake? And that was it. The majority said yes. So knowing Elon, if he listens, Elon sells 10% of his stake, I could see that causing that stock to come down. Now, he's tried to bring this stock down multiple times. He said he doesn't know why it's up here. He says, this and that, it's overvalued. Doesn't matter. The cult keeps buying and the people keep squeezing it. But Elon is polling the crowd, apparently. He's asking the audience, and they're telling him to sell 10% of his stake. We'll see. So keep an eye out on Tesla, obviously, as kind of one of your market generals, because this is kind of the one of the ones that it kind of started this whole squeeze to an extent and started this madness. So this is definitely one to watch. Now, not this week, but next week, next Friday on the 19th, we have the options expiration. Gamma and options have been crazy in this market. It's been weaponized options to an extent. So we could see some craziness this week. I don't expect it this week, but you never know. Anyway. Yeah, so that's the market. Who the hell knows where we're going to go, but setting your levels, watching your momentum, watching where we are in the pre-market, and keeping track of all those headlines will kind of help us prepare ourselves and be able to adequately trade. Oil, we had a little drop, which was interesting because OPEC didn't change their output whatsoever. You had people saying, oh, we're going to fix the energy crisis by other means then. Yeah, sure. I'm sure you will. Maybe some of these countries will dip into reserves. Maybe they'll pick up output somehow their own ways, but the energy crisis is still roiling. So if we get a pullback in oil, great. I think it could be a reload point before we get deeper into the winter. We'll see. We saw the dollar have a drop at one point, and then they kind of rebounded and bought it. We're just hitting a little bit of resistance up here in the dollar. Not expecting any kind of weakness or drop unless we hear any headlines on, say, Powell or anything like that, because tapering and rate raising is technically supposed to be good for the dollar. It's technically should be lifting the dollar. You do have the economic headwinds that could be kind of competing with that, but we should be seeing a strengthening dollar, especially with the issues that China's having. So we'll have to see there. And then obviously crypto, kind of chopping around above the 60,000. I think the infrastructure bill is going to be important to watch because it has that crypto tax on it. Other than that, there's not been much headlines in this sector. The one thing about Brainerd, again, is if she somehow gets the nomination over Powell, which I don't think is expected, but if she does, she was one of the earlier advocates of a central bank cryptocurrency, which would be competing for Bitcoin and would be competing for crypto. So it is something to keep in mind as well. Another potential headwind for Bitcoin. So just some things to watch on there. So that's kind of where we are in the commodities. Let's just talk about some of the stocks that I'm watching because we'll have some earnings this week, and you had a lot of stuff setting up. We saw retail be really strong. You saw Nike explode last week. You saw Home Depot and Lowe's. They've been strong. They're actually flagging up here in a little bit of a bull flag. Interesting levels to watch. You had stocks like Walmart seeing some strength again. We're back up to 52-week highs. We're actually green for the year again. So you saw some interesting rotations there. Obviously, Best Buy had a headline. They did park it back up on Friday. Hell, even like Nordstrom's, the undersold ones, were starting to pop back up. Best Buy breaking out on 52-week highs here. So you've got retail stocks in general kind of waking up a little bit. We'll see if that continues that rotation. I'm watching Walmart personally just because I still think that this thing needs to wake back up at some point. Maybe it's when it reports earnings, but going to keep an eye on that. Because it's Walmart. So we'll see. Obviously, the food companies have been really strong. Look at Costco. Look at Kroger starting to wake back up after their earnings. Kind of sent them back down to the 200-day. BJ's as well, breaking back out. Actually at a pretty interesting level up here. We just broke out and did a little spinning top. So I'd be watching some of these as well. I want to see if this rotation continues. We got a little bit of selling on the software stocks. These were the companies that just reported earnings. So like Net gapped up on earnings. They sold the hell out of that thing, took profits. Datadog gapped up on earnings. They sold that, took profits. I want to see if that continues. I would like to see people start locking these in because these runs haven't reflected the growth in earnings, haven't reflected. I mean, the market can ignore fundamentals as long as it wants. But this is going to be important to watch. Apps, which is one that was breaking out, actually missed on earnings, so they took that straight back down to the 200-day. You've got a lot of these companies, these software companies, actually getting some profit taking, which is nice to see, I suppose. Asana hasn't reported earnings yet, but this has obviously been a strong one as well. So we'll have to see if those continue as more of these guys start reporting earnings. We haven't even hit retail earnings yet. Nordstrom hasn't reported yet. Best Buy hasn't reported yet. Walmart hasn't reported yet. Target, Home Depot, all of these guys haven't even had earnings yet. So we don't even know the landscape of the forward guidance for these companies. We've had almost like our second best quarter ever, following last quarter, which was our best quarter, in terms of percentages of stocks beating earnings and having good guidance. So now it's on the retail sector to continue that pace. We'll see. On there. So I might watch a couple of those. I might watch like Nike and a couple of ones that are strong for short-term stuff. Nothing long-term. There's no reason for me to be buying up here necessarily in front of earnings like that, but we'll have to see. Obviously, I'm going to watch Nvidia and the kind of the stocks that went a little batshit crazy for short-term stuff. Again, if you're buying up here, God help you. But, they did a little double top almost, so it kind of followed the market, so it is something to keep in mind. Did a little double top. We're back below $300 a share. We'll see where we are by Monday, but this one has moments of good short-term trading, frankly. I mean, look at, Thursday was just trend day galore. Even Friday, you had some clean, touches off the UAP and stuff. So we'll have to see. Nvidia and AMD both kind of picked up a little bit. And both of them really picked up after the Qualcomm earnings. So maybe you watch Qualcomm because they kind of participated a little bit as well. We touched off of these kind of 52-week highs and then kind of pulled back. So maybe Qualcomm kind of picks up the slack. We're not seeing the underbought semiconductors really participate a little bit, but not really. So those guys seem to still be staying weak. I'm watching Roku personally. We finally got those bad earnings out of the way. Again, I mentioned it in here when I was looking for the short, and I said, fool me once on this short, shame on you. If it fools me twice, that's fine. Shame on me. Analysts love it. But I just like this double top. Technically speaking, we did like a little M pattern here, and now we're kind of we're breaking these lows, frankly. So you've got a little bit of room here. Maybe look for like a $200 target or something. That's optimistic, but that's what I'd like. So I'll keep an eye on Roku, see if we can get that continuation. I will actually watch the value plays here. I really don't like that we did that gap, so this isn't a place for me to be investing necessarily, but I like that RCL touched this 52-week high, now almost a triple top. We'll see if that pulls back or gives me what I think is a good entry. Some of the airlines are looking relatively good, especially the ones that are over the 200-day. We'll just have to see. I want to let them show me that they're going to hold up here and hold that 200-day. I'm hoping that they don't just break and go, but we'll see. Alibaba is kind of rolling back over, and I kind of like that. You know, you got a little bit of covering on the Charlie Munger doubling down on his position, and now we actually did almost a little head and shoulders here, and we're breaking that shoulder line, and we're back below the 50-day. So I might look for this one this week to see some continued weakness, especially with all the negative China headlines. We'll see. Lucid Motors woke up on Friday out of nowhere. They kind of took this one up. So I think Tesla, obviously keep an eye on Tesla because Tesla's kind of queen bee in this sector. Lucid, NEO, XPEV, all these guys, a lot of them take note from Tesla's movement to an extent. They're all their own companies, but right now in this market environment, we're seeing that. But Lucid just kind of woke up and broke out on Friday, so we're back up at highs here, and I'm curious to see if people rotate and continue pushing into this because you've got some room until this gap fill on Lucid. Pfizer obviously, had that nice little gap up on their pill headline. Maybe we see them wake back up and continue higher. Merck, what was interesting is when Merck had their COVID pill headline, they sold the hell out of the profits. And then you kind of got some more headlines in here for them. Now, obviously, the Pfizer headline derailed them. But so I'm curious if we get the same kind of thing in Pfizer. I'll be watching that just to see if they did have their good earnings in here. Good earnings, good vaccine guidance, which is different compared to Myrna, which actually had abysmal earnings and abysmal vaccine guidance and now gapped down further with the Pfizer headline. May they rest in hell. And Novavax, which had abysmal earnings. I mean, they made like 50% of the revenue. So Pfizer's kind of the winner here in the COVID vaccine world and COVID pill world. So just keep that in mind if you are watching them, that they're at the moment the winner. I'm going to watch Airbnb for a second day play. Monster explosion after earnings. I mean, absolute explosion. I'll play, obviously this is going to be more short-term in nature, maybe a day or two if I do swing, but I'll watch the highs here for like a momentum breakout continuation. That hasn't been that prevalent in this market, but so I'm going to be cautious to see if we might have an inside day on Monday, but I mean, that's a heck of a run. It's a heck of a breakout. It was a nice technical play too, just that alone, kind of almost a little cup and handle to an extent. So this could continue. We could get like 2 or 3 days of continuation on this one. So it's definitely one I'll be watching because you saw people really flooding into that one. Other than that, IONQ, this is one that continues to just have these weird breakouts. No real headlines in here. And you got to be careful because some of the days it trades are choppy, some days are trend days. So this may be one that you either have to try to hold a little bit through some pain or just see if it's going to be a clean day first before you trade it. Because some days it can be just a little nasty, but it is doing a lot of volume right now, which is interesting to me. I'm definitely going to be watching Disney this week. Friday is the 2-year anniversary of Disney Plus. I expect a lot of trailers, a lot of hype, a lot of headlines to be coming in to try to, potentially try to drive that higher and get some hype in there. They've been a little undervalued. We actually saw them wake up on Friday a little bit here. People have been considering them a reopening play. I think they're both, frankly, between the parks and Disney Plus, but they're retesting this 50-day, which we failed 1, 2, 3, 4 times to an extent. So if we get through that, your next lid is the 200-day, and maybe we see a little bit of run up into that 2-year anniversary. We'll see. But I like that play as well. Visa and MasterCard, the card processors got a nice pop on Friday, so I saw some consumer credit data. They actually doubled the amount of new expected consumer credit. I mean, absolutely blew consumer credit out of the water. It was insane how much credit there was run up that they posted for October, I believe. So it was massive. So that's part of the reason we saw them buy. We'll see if the value buyers step in here. Obviously, a lot of them have been kind of beat down, despite having good earnings. Visa had good earnings, MasterCard had good earnings, American Express had good earnings. So we'll see if people rotate into there. PayPal isn't getting any of that love. But they are at an interesting technical level. I know some people in our chat have been trying to dip by this thing. So we'll see. Hopefully it kind of bases for them, but we'll see there. But that's an interesting little thing I saw. I kind of like this Oracle setting up almost a little bit of a head and shoulders. There's a little bit of a head and shoulders up here, and if they're just not participating with the market strength, so honestly, if Oracle starts to look like they're going to roll back over, I think we can get a pullback on them. But I'll need a moment to see if they actually do that. One interesting sector is going to be Pinterest. So Pinterest just reported earnings, and they were kind of the last social media company, quote unquote, to report. The social media stocks have been really beat down. Look at Pinterest, look at Snapchat, look at Twitter. They're all kind of doing the same thing right now. So the question is going to be, what are we going to do from here? We're kind of flagging down here, and I want to see if what happens, because Facebook's been bouncing. I think we could see a continued run up in Facebook, maybe into December 1st when they change their ticker to Metaverse. But so Facebook's been bouncing. I think Facebook bounce could actually continue, but we'll see. I don't like the gap that it put in, but I'm going to be watching the social media sector as well after there's Pinterest earnings now. So that one's going to be pretty interesting. Some of the other stocks, I like lithium just because it's been a fun trender, but it is a longer term kind of, you have to hold for multiple days. We're continuing to see a lot of the metals and things like that continue to run just due to scarcity and things like that. Some IPO stuff. I mean, I kind of like the technicals we're seeing at Allbird. Obviously, the biggest issue here is lack of volume. So there needs to be some volume in here, but it is flagging in here pretty nicely. Had its IPO day, nice little strong IPO day. Now we spent 2 days kind of moving. So if we get up to the higher end of this range, maybe we see something out of this. In terms of IPOs this week, there's the Hertz Global Holdings, which I still haven't looked at. I think it's just this HTZZ, I believe is just going to change to HTZ. I'm not positive on that, but they emerged out of bankruptcy, yada yada yada. But this HTZ is going to be on Tuesday, so it's definitely going to be something that I watch there. Expensify, I saw some people talking about it. I don't know much about them, but that is on Wednesday, and I believe that's the main ones that are this week. It's not much in terms of size. There is a big one in market cap, and I've never heard of them, but Rivian Automotives, and this is on Wednesday as well. This is a very large company apparently, in terms of market cap. So I don't know enough about them to hype that yet, but it's on Wednesday, so I'll figure out the details before that actually comes out. But that'll be on Wednesday as well. Two other stocks that I didn't see but I saw a move and maybe I'll trade is CFLT, Confluent. They broke out on Friday like crazy, and KDNY, they broke out like crazy on Friday as well. Two just massive bars in here out of nowhere that I didn't see anyone really talking about, and I'm kind of curious about those, so I'll see if that can continue. Some other potential continuation from earnings plays. Peloton, I think this short could continue, frankly. They tried to bounce it. They couldn't. They finished at low of day. That's typically a bad sign to see Peloton do something like that. So Peloton had earnings. They missed terribly on earnings. They tried to bounce this briefly, and then they just sent this back down to lows. Now it's kind of gapping down and kind of holding down here. So honestly, we could see Peloton continue on the way down as well. Dropbox as well. Dropbox had, look at this bar. This is just a slaughtering. They actually had good earnings. They beat top and bottom line. The issue is that I think this quarter you're seeing software companies really knock it out of the park and give good guidance. Dropbox didn't do either of those things, so they took that down to the 200-day. So maybe we either see a bounce off of this level or we see continuation. We'll see on that, but I do like kind of what we saw on that in terms of being able to trade off of it. Some other stocks in here, Big C, their earnings kind of drove them up to the 200-day. Interesting little level here, so maybe we get some continuation here. It's kind of tough because it's at it. I wish it would have gotten through the 200-day before the end of Friday, but no such luck there. We'll see if we get anything on that. Estee Lauder kind of broke out here. They had their bad earnings, and then they dip bought the hell out of it, and they've been continuing to drive this higher. So this one broke out on Friday. Maybe you get some continuation as a higher price stock, though, so keep that in mind. Not the most attractive thing, I suppose, on those regards. Some of the stocks that are reporting earnings the first half of the week that I will be watching and keeping an eye on. You've got Triple D Monday after the close. They've run this before. Obviously, Cathie Wood, I believe, was pretty big in this, and you've had some hype in here before, like at the beginning of the year, obviously, and they've woken back up. We are kind of starting to push above the 200-day, so maybe we see something on here. Roblox reports as well. Roblox woke up for a little bit there after the Google store kind of headlines, taking their profits, taking half the profits from them that they usually do. So maybe we see Roblox wake up. I saw people talking about how Roblox is a really good long-term metaverse play, but I haven't done due diligence on that because metaverse is a 10-year endeavor anyway. AMC reports on Monday after the close. So, hey, who knows? Maybe we get something from AMC. It's very unlikely, but you never know. You never know what the hell could happen with this stock. Cara, which is a stock that I've actually been watching for a couple of days now, waiting to see if this broke 18. They report Monday after the close, so maybe they break it out in front of earnings. Regardless, if they beat on earnings and we gap up here, you could see some action. Obviously, a big old void of space above them if they do. Lemonade, which some people like, it's that kind of insurance play. They were obviously super hot going into the beginning of the year and then have since kind of come back down to IPO land down here. So we'll see. We'll see if they wake up. It's unlikely. PayPal actually does report on Monday. I didn't realize that. I was talking about how beat to hell they are, but it would be interesting to see if PayPal gets some earnings love. Space, but it's space. Space hasn't been that sexy or hot for a while now. I don't expect anything, but again, it's good to know because this has had times of fun. Other than that, you've got Edit on Monday. Again, just a stock that's not been awake. Tuesday, you've got Blue Apron, which ran back with AMC not too long ago, has been an active sequence. So it is kind of on the move. OCGN actually reports earnings on Tuesday, but they kind of already had their hype going into the vaccine approval. So I doubt people buy this again. Bntx, which is Pfizer's partner with the vaccine. A little surprised to see them dropping off here, but they do report as well. Workhorse, which, again, you've got a lot of these past meme plays reporting earnings. It's very unlikely that all of these can wake up, but you never know. Some of them may. Palantir does as well. So just cycle through them on Monday, and Tuesday, see who's getting the volume and who's not, and maybe we'll see something. Coin reports Tuesday after the close with everything that Bitcoin's been doing and all of the shit coins. I'm very curious to see how Coin's been doing. They pissed off the SEC not too long ago and tried to go toe-to-toe with them, and then they went home with their tail between their legs. So I'm curious to see what they have to say about the future and anything like that. Now, they're in a little bit of an active sequence. We've hated the valuation of them up here, but we'll see if the earnings can reflect it. Dash, I know we've traded DoorDash before. I finally, a personal anecdote, a little Peter Lynch method. I finally bit the bullet and actually bought DashPass just like 2 weeks ago because I realized when I was doing a little personal accounting, I was like, all right, I'm either going to buy DashPass and save a lot of money because I order coffee in the morning when I have my son with me or whatever else, or I'm going to stop ordering out. And so I was realistic with myself and I just bought DashPass. But they report earnings Tuesday after close. So does Kodak, which has moments, has moments of life. You never know. I would love it. Upstart reports as well. This is a good example of one of those software stocks that's just been ridiculous and just been having fun. Unity, which is actually at a pretty interesting technical level up here, kind of consolidating up here. Win, and I like Win because I've liked this Win and LVS bounce. We've kind of talked about this since, I think, September. I like both of these plays. I like that they're still in active sequence. You just had the Caesars earnings. Caesars earnings were actually pretty decent. They just sold it. MGM just had their earnings. They actually had good earnings. So you've had these kind of companies starting to set the bar with good earnings and good expectations. So you've got Win on Tuesday, and they've been kind of beat down. So I could see people buying the news. Plug reports as well, so maybe keep an eye out on the sector there. Fubo reports on Tuesday as well. So I think within all these plays, long story short, we'll obviously reference them every day, midday during our show and in the morning and so on. There's going to be we're in the tail end of earnings, but there's still a lot of good stuff, a lot of good opportunity. I think the more important part is that this second half of earnings is retail, it's reopening, it's value, and we're getting kind of through the software companies and the tech stocks. And so now that bar has been set with them having honestly really good earnings and really good guidance for the most part, now it's on retail. what's their guidance going to look like? Because the airlines were shit. The airlines earnings were terrible because of energy prices. The airline earnings were good in terms of airline traffic and people that want to fly. The labor supply is their biggest issue. Energy prices are their biggest issue. I want to see how these retail companies are doing with increased labor costs. We've seen labor productivity have one of its worst drops in I think 40 years, mainly due to labor costs and things like that. So it's something to keep an eye on in terms of how it's going to affect the retail sector. Is the labor supply going to be an issue? Our supply chain is going to really be an issue? And again, we've kind of talked about this, but this is just a good example of how, if you're looking for some kind of weird long-term investments, how I see a lot of traders out there looking. I saw another trader out there talking about American Eagle, and he really likes American Eagle as a potential long-term logistics play because as we get these retail earnings, if they all cite supply chain issues, and logistics issues, American Eagle just bought a large logistics and supply chain company, and so his thesis is that the companies that are kind of doing logistics and supply chain in house now are going to be better suited if the rest are having issues. It's an interesting way to think about it. It's definitely something to look at. I can understand that thesis, and I like that. So that's just an example of what you can be looking for out there for long-term plays. It's definitely a way that I'm going to be trying to look at if I decide to start looking for some long-term undervalued plays. But we'll have to see what happens there. But that's kind of it. It's going to be an interesting week because, again, it's going to be a quiet week in terms of economics, in terms of headlines, in terms of things like that. So it's going to be a lot of just, what's the market going to do up here? We're obviously a little overvalued and running a little hot right now. Are we actually going to get that pullback? Are the dip buyers actually going to take some profits? The smart money has been, or are we just going to see rotation? And then that rotation could continue to lead us higher until maybe next week when you have options expiration and you have gamma coming back into play. So we'll see. We'll see. It should be interesting, but we can call it there. And then